Good morning, good morning. It is...
Good morning. It is Wednesday the
15th of October.
15th of October.
Only I know that because I said it was the 15th yesterday.
Strong.
Now, Luke Moore, how are we?
We're good. Good morning. Sorry we're a little bit late. We just had a bit of a tech issue in the studio here. We needed to switch everything on. Running in a little bit late, weren't we?
I believe you did the half marathon at the weekend and finished in the Devonshire pub.
Incorrect. I didn't run the half marathon.
No, you watched.
My buddy did. Yeah, my buddy did.
How did he get on?
Beat my time. I did it last year, and he beat my time by a whole minute. Ooh. Well done, Will, if you're watching.
That must bring you out of retirement, does it?
Yeah. Although, to be fair, me and his wife, so we were kind of running around different parts to try and spectate. So we were at Admiralty Arch, then we went down to the Palace, then we ran back into the park, saw some friends, and then we ran all the way across. And there was this one moment where he was kind of coming down a straight towards the end of the race, and we just misjudged how big Hyde Park is. It's huge. Yeah. So we kind of swanning along from near the Serpentine to kind of walk all the way across. We're like, yeah, we'll be fine, tracking him on the app. Yeah, we're going to be totally fine. And in the end, we were like, oh, God, we're going to miss him. And so we ended up sprinting to get there. And it was like, he was running down here, we were sprinting down there, and we just crossed. Go, 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 go for the final bit. Push, push, push. So we got him through. It was all good. We got him.
It's a great atmosphere, wasn't it?
It's fantastic. Were you there?
Well, I was so that's my area to go on a Sunday walk and listen to my podcast. So, I was like, here's all these people in my park.
Yeah, it's busy.
Yeah.
It's really busy.
Yeah, but it's just good vibe around South Kent the whole afternoon.
It inspires you. So I signed up to kind of lodge my interest for next year.
Right.
Yeah, I loved it. It was great.
I might do the same
day out.
I'll do the 10K version. I'm not doing a half.
Why? Do the half.
I'm a sprinter. I do 400 metres.
Get your hokers on. Your new shoes. Straight. You'll be good. You're golden.
We'll see. Have you done a marathon?
No. So I trained to do the half and then got injured 2 weeks before.
Oh, no.
Had to pull out. It's really annoying. Really annoying. So I want to. It's like a mission to get it done.
Yeah, I bet.
So I'll do another half. Although my mate came back from it and was like, not the guy that ran, a different friend, and was like, so I run trails. And he lives up in York. Yeah, I run trails.
Nice.
And he's like, I've seen this Lake District 5 Peaks event. We're like, okay, and I want to do it. Right. How far is it? 50 kilometers.
Yeah.
So it's almost like an ultra-ish.
A marathon up hills.
Yeah, I mean, 9 hours he reckons it'll take.
Right. I don't think that'll be on my coming up slide, but let's see what is on for the show. Right, looky. Well, my friends, we are about to hit 2,000 subscribers.
Yes, let's
2,000. So who is going to be the 2,000 subscriber? You get to go to dinner with Angeline if you are the 2,000 subscriber.
Wait, hang on. The 2,000 subscriber might not know they're the 2,000 subscriber. Unless you're sitting there waiting just to wait and go out for dinner with Ange. Click.
Well, no, yeah, that's the point, because we might never get there then.
Oh, okay.
If nobody wants to be the 2,000.
Well, I sent a text out to all the clients I cover. I sent a text out this morning and said, I'm on Trade Live, let's go. So we might.
All right.
Let's see if we get a couple extra viewers today. If you're any of the people that I look after, lovely to have you join us.
Is producer Phil watching the numbers? Are we gonna find out who is the 2,000? We're now 2 away. We are 2 people away. So this morning, we know we're gonna hit it because we've got a great show which includes Piers coming up at around 8:30. So we got Tech Focus and Piers Buckworth on this morning, or he is now Apex Alpha.
Oh, has he got a new name, is he?
He's got a new name.
Apex Alpha.
Apex Alpha Trading.
That sounds like
on TikTok.
That sounds like some kind of Wall Street hedge fund.
Well, somebody said a prop firm.
Yeah, it could be. Yeah, a prop firm. Yeah. I did figure out when I put this kind of quarter zip on with a t-shirt. I did think, oh God, it looked a bit like Piers today.
Really?
T-shirt and the half zip.
God, he's got people that want to look like him now as well. Are we 1 away yet? We're on 2,000. We've hit 2,000. Hey. Where's the round of applause? Let's get the fireworks going.
Get it going. There we go.
That is fantastic. 2,000 subscribers. Boom. There we go. Well done, everybody. Thank you all for hitting that. Who was it then? Come on, in the chat, tell us who was the 2000.
Who wants to go out for dinner with Ange?
Oh,
look at the lights.
Oh, there we go.
Look at that. How good. Yes.
High five.
We got it.
Brilliant. That's it. That's me out. I said I'd get to 2000 and that's me done. So cheers, everyone.
Right.
Brilliant. Okay, well, we had, there, away from the numbers, saying Robbie the robot. We had the robot in yesterday. We've had a couple of emails, look, for a report card on the robot.
Okay.
One person said, quite impressed, the robot showed more charisma than some of the PCM staff that come and do the show are. I thought that was a bit harsh.
Yeah, it's a bit harsh. Oh, well, considering I haven't seen it, I didn't watch the show yesterday.
Ah, okay.
And I was in on Friday when it came in. I was in the office on Friday, but no one even thought to come and say, grab me off the dealing floor to come and say, there's a robot.
We could have got the robot to come and grab you.
Well, this is exactly right. If you're not going to get it to do anything.
Well, and that's
So what's the crack? Is it coming in regularly now, or was it just a one?
No, it's part of the show.
It's part of the show now. Where does he live? Where does it live? Sorry.
Well,
better not gender a robot.
Boise also asked, can it go round to his and do his refurb on the house? So a lot of people asking, what does it do? He opens the London Stock Exchange.
Yeah, he can open it can open the London Stock Exchange. Can it give us an overview on what happened overnight?
I don't think you can say it because you don't call your dog it, do you?
Well, no, my dog is a girl. My dog is female.
We see your gender in your dog.
I suppose, what kind of voice does the robot
have? Like Charlie Chaplin.
Okay, fine. So it's got a man's voice. So we can call it a him?
Oh, come on. I get that one, don't I? Charlie Chaplin. Silent.
Oh, yeah.
Let's go to overnight action.
Too early. What happened overnight, Rich?
Where do we start? Well, we of course we were down in the futures yesterday.
Yep.
We saw we saw a bit of a shakeout on the open, which was quite interesting.
But then we just took off. I mean, it was
absolutely took off.
It was the Dow was the outperformer, which you don't often see at the moment, given all the kind of tech.
And the Russell.
The Dow and the Russell, yeah. So I've got the Dow, it was up 0.4 yesterday. NASDAQ was down 0.7 and the S&P was down 0.12. So we saw kind of outperformance in the typical industrial names and not so much in the tech names, which was interesting. And then
it was good old-fashioned rotation.
It was a bit of rotation.
Which it should be.
And then Trumpy boy came out and started arguing about cooking oil.
Well, this happened about 8:30, didn't it?
Yeah.
So all those people on the 0 DTE options, they were all long. That was clearly what had happened during the day, was that people had spiked the market with those. They got slammed 40 points in their faces.
Yep.
And this is always the danger because, of course, if the people who sell the options are hedging all the way up, then suddenly there's that negative news story, and they got to get rid of their hedges.
Yep, and so it becomes a self-fulfilling prophecy. It just gets pushed even more. And don't forget, we had Powell as well was also talking at around 5:30 our time.
Yeah, so that was a positive story.
Yeah, so
that's winning this morning.
Yep, so that's signalling a further 25 bips rate cut. Interestingly, just on the subject of kind of data, we're not going to get CPI today. So we were expecting to get it.
No, it's been delayed since the weekend.
Oh, was it? Okay, fine. Last I saw it was on Friday. We were expecting it. Now we're not. It's going to get pushed to next Thursday, I think, the 24th. Yeah. So they are going to get it out before the next meeting, the next Fed meeting.
Yeah.
I'm just trying to get my dates. I think the 24th is, my calendar's not working. It'll be next week.
Powell was talking at a business event and was very clear about the downside risks to employment have increased. Layoffs and hiring remain low. So layoffs remain low.
Yeah.
So he's not talking about suddenly, a big cutting, but he's just talking about there's no hiring going on and that job availability is getting less and less as well.
I haven't got the exact line, but he said something about it's the perception of job opportunities and from the kind of labour side, so from the every person on the street, and then the perception from the corporate side that the rehiring process is getting worse. So actually both sides of the coin are assuming it's getting worse. Well, yeah, you can go this way or that way, right? But it's almost like if you had two lines that were both trending downwards. So yeah, you're seeing people stick around in jobs for a little bit longer, I imagine, and those kind of layoffs that are coming in are not being rehired for. So yeah, 25 basis points coming in the next meeting, it seems. We've got the Fed Watch tool. What's the odds of it?
Yeah, but of course that, because it was already priced in, then you can't really respond to it, can you? Because we've got all the good news priced into the market, and that's what Jamie Dimon was saying yesterday as well. So Jamie Dimon coming out and saying that.
Here we go. Here's the probabilities now for next meeting. If you want to throw this up on the screen.
Yeah, 95. So it's there.
95%.
It was unnecessary for him to even say it because the market's already got it priced in.
Completely. And how did the probabilities change? This is still, we're expecting 3 cuts by the middle of next year. So that hasn't really changed.
So yeah, the banks weighing in yesterday on their expectations, where the market are at the moment. Jamie Dimon, chart off. Jamie Dimon saying we've had $10 trillion of debt given out. That's clearly driven corporate profits. He's now in the cautious category. He says asset prices are high. He doesn't say some asset prices are high. He says asset prices are high in some form of bubble. Right, so you had that from JP Morgan. You also had a similar message from Citigroup. You also had the same message from the IMF over the weekend. IFM warns, chart up, IFM warns bursting the AI bubble could rival the dot-com crash. Right, so they're not even questioning whether there is a bubble. They're saying that there is one, and it could be as bad as the dot-com crash. So everybody now weighing in, the Federal Reserve, the Bank of England, the IMF, JP Morgan, Citigroup. How many more people do you need to tell you that markets are too high?
Well, clearly you. I mean, I saw a tweet that makes me laugh on the side of this. It's like we've got an entire generation of kids that have grown up on The Big Short, and now they're just going to call everything a bubble, which I thought was quite funny.
Well, no, it's the kids that are buying it all. That's the ones that are still buying the quantum computing.
The stuff that's going vertical.
Yeah.
Yeah. I mean, look, in certain sectors, there absolutely is. But I still think I'm going to be able to get this chart up quick enough for me to be able to carry on the conversation. A comparison of the sectors, a comparison between the sectors of the S&P looking on an equal weighted basis versus looking at it on a market cap weighted basis. Yeah, let me chuck this up. So there's a fantastic account on Twitter called the Daily Chart Book. It's definitely worth a follow. So if you can chuck this up on the screen here. So what this is showing you on the left-hand side is the S&P sectors broken down by cap. So technology is clearly on a market cap weighted added 19.7% to the S&P. The S&P in the middle there is up 11.4% on a cap weighted basis. Bubble, territory, everything you said just seems to fit to this data narrative. But then if you look on the right-hand side, if you were to assume the companies were not market cap weighted, so just weighted by 500 companies, the index was equally divided by 500, the S&P is only up 6.7%.
Yeah, that's why you buy the S&P 500 equal weight. Moving out of the cap weighted into the equal weight makes complete sense.
Completely, yeah. So this is saying, yes, you've probably got a concentration in the technology sector, but actually, if you look at the equal weighted, consumer staples have underperformed, real estate have underperformed, things like consumer discretionary are actually performing better than the index, the S&P cap weighted gives you. Do you rotate from S&P index into something a bit more equal weighted? So that's interesting just to note. Can I give you a slightly more joyous story this morning?
Well, no, let's stick with the reality first of all. So Alistair Osborne in the Times today saying FOMO is no way to manage a fund. Are we watching, Poppy? FOMO is no way to manage a fund. So that is basically a look at 193 European fund managers with 468 billion under management. Right, so these are the guys that move markets. What was the key finding from the survey? They're saying even if concerns around AI have increased, rising to the #1 market tail risk, that's not been enough to dampen a more positive equity market outlook overall so far. Asked, how much of the positive AI effect for equities is now in the price? 54% of managers think that we've got to fairly priced stage, right? That's up from 37% last month. 29% think that the AI rally has gone too far. So you've now got 29% of people saying we're too high, and only 7% think that it's not gone far enough. So that is our poll of the morning. 3 questions. No, time will tell. So what do you think of the market at the moment? Do you think that it is fairly priced? Do you think that the AI rally has gone too far? Or do you think that we're barely started? That's the 3 options. There is no, absolutely no time will tell on this, because we want the exact same answers as the survey have. So Phil, you're not putting that on. Fairly priced stage, or has the rally gone too far, or has it barely started? Because we want an exact replication of the Merrill Lynch survey to give us a like for like.
Go for it. Let's put it up. Let's see what we can get. Right. I want to talk to you about 2 stocks this morning that have come out with their numbers. Not to fly in the face of all the bearishness you've just given everybody, but
so reality, not bearishness.
Bearishness. 2 stocks.
Federal Reserve, Bank of England, JP Morgan, Citigroup, the IMF are all telling you one thing. That's not bearishness.
I'm going to look at companies and look at their earnings to see what's actually happening. Let's look at ASML. ASML have come out, and on our 24-hour markets, we've got them up 3% on the back of their good numbers. And I've just thrown the data up here. The headlines, Q3 bookings. So to put ASML in the kind of the overall picture, and I'm sure Piers will talk about this as well.
Yes, stable. Only stable.
Peers are Peers are ASML is the printing press of the chip sector. So their Q3 bookings, 5.4 billion beat 4.9%. That's a 10% beat, driven by AI infrastructure spending. Sales, 7.5 versus 7.7, a little bit of a miss on that one. But their 2026 guidance is definitely not going to be below 2025 levels, and they've reaffirmed their 60 billion revenue target for 2030. They've said that their China exposure has increased 42% of Q3 sales, up from 27% in Q2. They are the only kind of fly in the ointment is they're not going to complete their share buyback. They're going to concentrate on using that money to build internally.
So they think their shares are too high?
Or they're going to continue to
same as Jamie Dimon said yesterday. He says, well, I don't think I'm going to buy my own stock here because it's already rallied. Now, how much AMSL rallied?
So ASML
in the last 2 months?
Let's have a look while we're here on the charts. So we're up 3% so far today, and we've come up from, what's this? This is these are the ADRs trading in the US, $588 to 101. So we have doubled since. Let me just make sure that we're getting that on there. Doubled since the COVID low. Not the COVID low. The tariff low.
Okay, but since the 3rd of September, we're up about 50%. So 50% in 6 weeks. So the stock's up 50% in 6 weeks. Do we think this might be priced in?
Probably, yeah.
Only 50% in 6 weeks.
Let me give you another one. Firstly, I'm going to show you the CAC index. Double headwind here. Double tailwind, sorry. Le Cornu has been confirmed as the new PM over in France.
Yes.
So he's been able to fall into, what have we given us on here? Have they given us a write-up on the politics? No, they have not. I'll flip back to the chart. But I saw a headline flash across my screen yesterday to say that there is a deal that he can get done on pension reform. I think he's actually backing away from pension reform, which is why he's been able to get into power. But I don't think that's the main story today. LVMH.
Yes.
Louis Vuitton. Moet Hennessy? Moet Hennessy, which is 7.7% of the CAC. So if the market's up 1.8%, we will start to get the opening auction in just a second. Q3 sales have returned to growth.
They've eked out a 1% increase.
They have returned to growth after 2 quarters of decline. Let me get their story up on the screen for y'all. LVM.
The wonderful thing about the calendar rolling over, so your comps are easier.
Yeah, well, yeah, very true. I'm not getting the full story on here. So they're indicating up 8% on TradeGate. To give you the numbers here, their fashion and leather goods fell less than expected, only 2%. Their key catalyst, and this is the interesting part, Chinese sales returned to growth.
Rebound,
up 2% versus a 9% drop in the first
China.
half. Their wine and spirits division are back to growth after 2.5 years of decline. Champagne is being restocked in the US.
I bet it is.
I wonder,
no wonder.
I wonder how much of that is just pulling champagne in ahead of tariffs. The overnight ADRs were up 8.8%. Positive read across for the sector. Keep an eye on Kering, keep an eye on Richemont, keep an eye on Hermes. The CFO does warn that Q4 comps are going to be a little bit tougher, but 2026 is going to be a little bit easier because they're coming against such a bad year.
And it's interesting, that ties into this story from the airlines as well. So we had, was it Delta that reported last week? So Delta Airlines, what's happening is they're seeing a 9% increase in business bookings and a 4% drop in the back of the plane.
Really?
So it's a very much that 2-tier economy, you know, a big increase in champagne sales in America.
Yep.
Business class bookings only. This is what happens. We're into excess central.
You know how I like to bring things with me. Speaking of airlines, who's been on the rating agencies overnight? Morgan Stanley. They have changed their coverage on the airlines in real time. So I'm glad you brought that up because this was going to be what I was talking about next. Look at that. So they've gone overweight on IAG. We will give you the price when I can see the price, but for now we've just got the stories. They are Morgan Stanley's preferred airline play, primed for FY25 EBIT upgrades. Again, so if you're looking at IAG comparing Ryanair and Air France, Jet2 and the like, IAG you would argue is the premium player out of those, and they're preferring IAG, and they're downgraded names like EasyJet and Lufthansa. So yeah,
That's brave and EasyJet, isn't it?
well, considering yesterday.
Where's my coffee?
Yeah, I owe you a coffee. Yeah, I do. Well, I can't get coffee. Well, one, we were running too late anyway. I'm not going to nip out and go and get you a coffee. So they're underweight on EasyJet. Winter capacity issues and a lack of cost tailwinds they think is a risk. What else is interesting in there? Key takeaway. Buy the profitability and cash return leaders and avoid the high valuation, cost-challenged names like Lufthansa and EasyJet.
Right. Yeah, I guess that ties into it, doesn't it? Because you're getting people still doing business trips. You're getting the ones that have got the business class section of the aeroplane.
Yep.
Their revenue's fine, but where the people are hit, of course, is the lower end of the wealth gap.
Yeah, completely.
Like me, flying in EasyJet.
Flying in SqueezyJet at the back of the plane.
Right, what are our favourite viewers, the ones of the 2000s, saying this morning then? Poppy is coming out defending the chairman, adding to risk last week. He is watching. Trouble is there's too much bubble talk now. That's 100%.
Yeah.
We saw in the BBC, we saw in the Sunday Times, LBC, everybody asking, is there an AI bubble? Well, there's not.
There's definitely a bubble in people talking about bubbles.
Exactly. That was on CNBC last night, wasn't it? Yeah.
Oh, there you go. I didn't hear it. Yeah. There's definitely a bubble in people telling me that it's a bubble, which if you think about kind of psychology, you should be buying when the kind of the sentiment switches towards, oh my God, risk. You know, that's arguably when it's the best time to buy, because the kind of the crowd are starting to think about taking risk off. Therefore, to be the contrarians, you should be looking at buying.
Andrew McKelvey, spot on this morning. Thought you only drank bubble tea these days, Rich.
Oh, you don't drink that crap, do you?
God, you are not on fire this morning, are you?
Oh, bubble tea.
Right. Yeah, Phil's getting bullied. That's right, but it's fine because we're both contractors, so it doesn't matter.
Yeah, true. I'm the only staff member in here. We've got some UK headlines to rattle through. If you want to get through some,
Let's do it.
Yeah. Entain, probably the biggest out this morning. FY25 guidance has been reiterated. Their Q3 performance provides further evidence of underlying momentum, and they're increasingly confident on generating $500 million of annual cash from 2028. Do we have any early calls on Entain?
Up 1%.
Okay,
Up 1% Entain.
Jupiter Asset Management, they said there's positive momentum, marked improvement in retail and wholesale investor sentiment, with their assets under management up 7%.
Up 2% pre-market.
2%. We've got Rathbones. We're sticking with the kind of fund managers this morning. Their total net outflow was 0.6 billion. Total operating profit 236 million. Their funds under managed assets, FUMA. Do we think that's what it is? FUMA? Funds under managed assets. Funds.
Yeah, I'm not sure about the M, but
Administration. No, funds under managed administration. If you know what FUMA means, and there are any fund managers out there,
Poppy will give us the answer there.
up 3.7% to 113 billion.
Just some others. Antofagasta cut to sell at Peel Hunt, £22. That will have an impact because Peel Hunt got a good name in the sector. And Legal and General, they rate a new ad with a £2.55 price target. Is it? What price is Legal and General now? That must have come off. If it's not
LGN, I'll take a look.
Right, let's take a really quick 2 minutes and we'll be back with the answer of that survey. On the morning, we've hit 2,000 subscribers. That means we should get 2,000 likes. If you hit the like button, the thumbs up under the YouTube here, that will be very much appreciated. We'll see you in 2 minutes when the market open.
Can you give it a like on here?
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Right, straight into the poll results because we've got 50 seconds before this market opens. You have flipped the results. 60% of you think that the rally has gone too far. 60%. Remember, in the Bank of America survey, it was 59% thought that we were fairly priced. Then we've got 24% of you are the bulls. Come on, the bulls. We've barely started. You're in Luke Moore's camp. Up and away. You're in Dan Ives' camp. We're only at midnight in the party.
Yeah.
And the party runs to 5 a.m.
It's just started. Yeah, I never know when to call it. I never know when to call it at night.
63%. 63 of you taking part in that vote. Thank you very much for that. It's clearly a top thing to be interested in.
While I ring the bell, do you want to sort your collar out because you're looking a little bit scruffy?
Thank you very much.
Here we go. Double bell.
Double espresso. Right, so what are we watching then? Well, I'm watching Antofagasta, seeing if their downgrade has any impact.
Okay, do you want a big number?
Go on.
LVMH up 16%.
Wow.
In the auction.
Do they open in France?
Well, we are not yet open on LVMH, up 16%, 620 euro.
Getting some strength there in the underperformers. WPP and Pearson both up strong this morning. Who else have we got? Canal Plus, British Land. British Land had numbers this morning, so they're up 1.4%. British Land were saying that they see full year 26 underlying EPS of at least 28.5 pence, and the stock's only trades 367. Quite interesting, that. What's that then? 13 times earnings?
Yeah, not much at all. Entain, after their numbers, down 2%. So not being liked there. What else did we look at? We were looking at Jupiter Fund Management. Jupiter are up 2. Bang on the core.
Yeah.
How often do they get it bang on the core?
Not very often.
Now up 2.5%, £1.54. And the other one was Rathbones. Rat.L up 85 basis points, £18.94.
Surely they can come up with a better ticker than that, can't they?
Yeah, Rat.
Rat.L.
I mean, talk about an illiquid stock. It's traded 141 shares out the gate.
Entain, 831 to 832 there, down 1%. Bellway down 60 basis points. Weatherspoons on discount there by 50 bips. And Glaxo also down 80. So you're getting your high beta names at the top. Watches of Switzerland benefiting from LVMH this morning. But shall we go to Europe and have a...
Yeah, let's go and have a look and see what Kering and the others are doing.
Oh, Havas have had a good morning as well.
I think there was news on Havas.
Oh, thank goodness I covered those Stellantis. That was a disaster from the start, Luke Moore. I got a get out of jail free card yesterday and took it.
We looked at that last week, did we not?
Well, we shorted it, and
it was popped.
Pumped ever since. So thank goodness.
Let me get the story on Havas, because I'm pretty sure I stole.
There's ASML. ASML up 3% at 873. Much better. Remember their last set of numbers? We were looking at them down 10%. 585 euros they got to now trading 871. Puma has come off recently, 2150. That's got numbers soon. But yeah, LVMH, I guess we haven't uncrossed yet. Still a few minutes until we get
waiting
that.
on that. Yeah, I'll keep an eye on that. So Havas have had news. So strong organic growth in the third quarter, sharpens its full year 2025 guidance. Strong organic growth of 3.8 in Q3 2025, driven by a very solid performance in the United States. So just good numbers from Havas there, so performing well.
Burberry, not opened yet. Also in a long auction. That one looking up how many, Luke Moore?
It's indicating up 6.2, £12.30.
It's a day for luxury.
How are Kering and...
Also not open yet.
Oh, right, hang on a sec. I'm going to have too many deal tickets open on my screen here.
So Kering, Hermes, Louis Vuitton still yet to open.
Hermes indicating 6% up. Let me get you Kering. God, if anyone's got the luxury stocks, take your pick. Kering indicating up 8.5% so far this morning.
Wow. And Swatch is open, up 6%. So Swatch managed to open thanks to our Swiss friends. Let's see how Richemont are doing. Richemont watches up 5%. So strong. That's because they're in South Africa. Richemont in South Africa up 5%. Yeah.
So what does analysts see the result as a good sign for the continued recovery? Bernstein have already been out highlighting that the sales exceeded expectations across all divisions. JP Morgan are also on the tape saying that they anticipate shares in their competitors will also react positively. We're seeing that now, and believe the overall environment is positive enough to expect a generally better luxury reporting season.
Here we go. Kering is open, up 7%, 320 new highs for the rally. Remember, you could have bought them at 200 not so long ago. You could have bought them at 180.
So you've got Kering. Hermes is open 5.3% up, €2,132. LVMH still not yet in auction. Still not yet open in auction. 14% now the indication, up 607.7, €607 when it opened. Sorry, I'm not getting my words out today. €532 it closed at, now indicating €607 to open.
Do we have anything to do here, Luke Moore? We've got Kering, Hermes, Richemont, swatched to some degree.
Have you got any?
Burberry. I don't have any of the luxury names.
I wouldn't start shorting these. I don't think there's any.
Oh, no. I don't think you short them.
No, I don't think you short them. You'd maybe start to sell puts if there's a turnaround coming in and this kind of China demand story is changing. You'd maybe sell some puts.
I've actually meant to short puts in Louis Vuitton for a long time and then never ended up doing it.
Yeah. So you'd probably do it that way, especially today, as if all of these things are moving quite well. There's going to be some vol that's ticked in. So actually, if you've got some 3-6 months, well, we'd have to look at where we are on the tasty kind of 45 days to expiry if you want to do something with a bit more shorter term. Today, you're going to see a higher IV on these names. You might see stuff really crush down on stuff that's due to expire this week as these kind of events, the immediate vol gets priced out, but the longer term IV might still stay intact. They're now indicating 601.80, so they are starting to pull back a little bit on the early calls, 12.8% as opposed to the 16% that we were looking at just a few minutes ago.
I'm tempted to say that Kering's too high here, though.
Let's have a look at the chart, because it has come up from a long way, isn't it?
Yeah, and Gucci is not Louis Vuitton. Gucci is a lot more in a questionable space for fashion than Louis. Louis is your staple and will always be.
I'm looking for a Louis bag, actually.
Well, there you go.
those the kind of the classic holdalls that are just stunning.
Yeah.
Yeah, I want one of those.
That is an asset in itself.
Yeah.
So we're only back to where we were. Okay.
Okay, so that's a double top. I mean, that's a breakout. If it closes above,
yeah,
you're straight back into trend and breaking out to the high side. To me, I don't think there's anything wrong with that at all.
Nah.
If you fail it and you squat back in,
I wouldn't be in it for numbers, put it that way.
When are their numbers? I will get that.
Right. What else can we? Does Porsche come into a luxury goods?
In the same sense of Ferrari, but Ferrari have been absolutely killed recently.
Yeah, so we know things not good at Ferrari.
No, but I think the whole play on those types of businesses, we've got Kering due to report on the 21st of October, just FYI, so next week.
Right.
So actually there's a short-term potential trade there. I think you buy those because you believe in the pricing power of them. The whole reason why Ferrari have been considered, such a quality stock for such a long while is they can constrain supply and pretty much charge what they want.
Yeah.
I don't think Porsche have the same ability. They've got lots of models.
Louis Vuitton's not the same category as Ferrari, is it? Whereas I think Porsche probably is. You get the same people buying Porsche as they buy Louis Vuitton bags.
Well, I don't have a Porsche. I haven't got a car, actually. So I'd rather, is that a typical Londoner thing to say? I'd rather have a Louis bag than a car. Get the tube. Louis Vuitton bag and get the tube.
Yeah.
Sound like more of a stockbroker.
Definitely a Londoner.
Sound like more of a stockbroker, you douchebag. I'm so sorry about that.
Right. Boise saying the Ronnie demo account will be pleased with ASML. Yes, he will indeed. We'll have to get a quote from Ronnie on that.
Yeah.
Admiral Kukumba, congratulations on your promotion. Is that because he's an admiral now?
He's gone from Kukumba to Captain Kukumba, now to Admiral Kukumba. Aye, aye, Captain. Aye, aye, Admiral.
Good stuff, right? Well, we want to go on to guess the chart, but we do want to see Louis Vuitton open.
Yeah,
look, Mira, open them.
So €6 still. You know what it's going to do? It's going to open when we go to break, isn't it?
Yeah. So let's just hold off that.
Well, I'll tell you what.
For a little bit longer.
We will chuck it on the chat as soon as we see it.
Kering now 323, so that is in breakout territory. That's above the previous. Right, Maturin saying that Pulsar Helium is absolutely flying up and away, up 170% since the CEO came on this show to talk to Angeline.
Lovely. Wow, 170%, up 13 again today, 57 to 63 pence.
One that is not showing that kind of, oh my goodness, SWC is 70 offered.
Oh.
That means it's now trading at a discount to its Bitcoin NAV.
Yeah.
That is mighty interesting. Oh, I'm trying to hold myself back from it so much.
I'm doing exactly the same thing. I've got an average of, I think, £1.20 on this now. Yeah.
So now it's just buying Bitcoin.
Well, no, now you're buying Bitcoin at a discount within
Yeah.
your ISA, potentially. That's the story. So ETNs, the crypto ETNs aren't dropping as quickly as people thought they were going to.
Do you know what we've missed this morning? We could have bought the CAC.
I told you about the CAC early doors, 1.8%.
No, but we could have bought it pre-market. That's
now?
the one that we've
2.3.
missed.
That is why you watch this show, ladies and gentlemen, because we were giving you the story as it happened.
And we didn't buy it ourselves.
We didn't do it ourselves, no. We didn't do anything about it.
We're not here to make money for them. We're here to make money for me, Luke Moore. You're my PCM now.
Yeah, I'm your BCM now.
But I must admit, we're on 2 for 2. Luke Moore and I, he sent me a couple of good messages in your WhatsApp group, and I've acted on them twice.
Which was the one you
And
got
we've made
recently.
money twice.
Was that the EasyJet one yesterday?
On Friday night, you predicted that Trump would send a message on Sunday, so the weekend markets might be worth a look.
Yeah,
Look at the CAC from
Just call me-
755.
Just call me Mystic Moore. I'll take that.
That is really frustrating. That is 100 points in the CAC that were free money from when Louis Vuitton
I mean,
had already.
in fairness, I didn't immediately think to look at all across the kind of the look at Hermes, look at Kering. I didn't
neither did I.
expect to see it such a strong read across. It's an impressive read across. LVMH is still not open, now indicating 602 in 137,000 shares, which seems like a small amount of shares.
No, look, Mir, you
Stock.
cannot say that that is the typical French going on strike and not even bother opening the stock.
Not
yet.
even bothering.
Just because a British stock would definitely 100% have been open by 12 minutes past 8. Can't say those things.
Go on, give me Burberry then. Where's Burberry as a mover? So up 5.6%, and oh yeah, where we go? We're on screen, and holding on to it. Really? So we've had that first push higher, and we're holding on to it.
So Burberry up.
We've got up 5.6.
Right, 5.6. So just to run through, Kering up 7.5, Hermes up 6, L'Oreal up 3 if you count them in that sector, and also Swatch and Richemont trading higher as well. So it is definitely a day of luxuries.
Let's get, yeah, love it, love it.
It's a US stock. The chart of the day is coming up now. We have got 148 of you watching now, so please give us a thumbs up on the YouTube on the day that we've hit 2,000 subscribers for the first time. Thank you, one and all.
And if you can, we're going into fast markets with Angeline, who's going to come and take the hot seat with me. So give us a couple of stocks that you want us to look at, and we will get through to it now if I can convince Ange not to talk about luxury for the next 17 minutes.
And I'll see you back with Piers Buckworth in 20 minutes for Tech Focus. See you soon.
Sharp and the markets come alive. Rich and Andrew ready on Trade Live with IG. Charts up on the table, tickers on the screen. The traders gather round for the morning routine. Chart it up, chart it down. IG trades all around. Raise your glass, the markets sing. Trade Live with IG. Let the day begin. Oh. Tesco's in the basket, EasyJet takes flight. Whippers pouring pints up, spheres be shining bright. BAE is booming, Rolls-Royce starts to climb. Unilever steady, Barclays keeping time. It's not advice, we're just along for the ride. Guess the chart is waiting, can you find the line? Chart it up, chart it down, IG trades all around. Raise your glass, the markets sing. Trade Live with IG. Let the day begin. Prudential, Aviva. Hey, hey, hey. Vodafone,
we're going to do fast markets for myself and Luke.
And I put it on the chat. Of course, LVMH opened when we were at a break. That has now opened up 11.5%. It opened 602, immediately dropped, and is now trading back below 600 euros, trading 594. So
I mean, it was always a bit going to be Soslo. The moment you mentioned it, I thought it was going to.
As soon as we went to the break.
Welcome all of you to Fast Markets. Let's do the chart.
What was the guess the chart, chaps?
We're here and we have a winner.
We do
Right.
have a winner. Who is our winner? David. Well done, David.
Yeah, well done you.
Congratulations to David AXP.
Yeah.
Let's go.
Well done you. I have to say, I wasn't paying attention because I was laughing too much about the song that came on.
You came in. So you came in. I don't even want to know how to describe the dance you did as you walked into the studio this morning. I want to say like kind of Slavic. I can't. My knees would not let me do that.
Erupting in laughter. I think I was laughing because we were how to lose 2,000 subscribers with that song.
We've got some stocks on the fast markets.
Good.
We have Constellation Energy from Funky Gibbon. We had, just before it disappeared off the screen, we had Shopify from Welsh Ace. So let's take a look at Shopify, shall we?
Yeah.
Shopify.
You won't have any problems not getting me to talk about retail because everyone on this chat knows that and absolutely hates retail. Both in terms of doing it and also stocks as well. Although I do have Hermes. Shopify, very good uptrend here. It's on the EMA that I've got up there and it's above the 20, the 50, and the 100 and also the 200. But bear in mind price action is crossing below the 20 now. It had a brief dip into the 50 territory. So just buyer beware there. If you're in Shopify, just make sure that you've got a red flag attached to that. Have you ever used Shopify? I've never used them before.
Do you know, I've not used it as... It powers a lot of shops, doesn't it? So you've probably used it unknowingly because you've been buying something online and it's been used. I mean, in terms of just running through some of their... Hey?
No, I haven't. I hate online shopping as well.
Do you?
Why? I just don't like retail in general. I, as a young child, dragged to 2 shopping malls a day. For my life, it killed all kind of retail for me.
Well, I hate not trying things. Do you know what I hate? I hate buying things, getting them home, and then they don't fit. Then I have to send them back. I prefer to go and make the effort to go shopping, to try things on, and then at least I don't have to mess around going to the post office and all this kind of stuff, blah, 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 blah.
My current record, Luke, is 7 jackets in 15 minutes.
What, getting them on and off?
Buying them.
Buying them?
Yeah.
So you paid for 17 jackets?
I just bought, one fit really well, and it was a stylist called Edmund Sir, and I said, I'll have every colour.
Oh, that's different.
Yeah, but my point is I don't want to have to go in. Right, let's go fast markets.
Right,
At home.
They are reporting on the 29th of October. Just keep an eye on that. Last quarter, of course, they were talking a lot about improved revenue growth. They were talking about there was a 31% year-on-year revenue growth, reaching about 2.68 billion, 16% free cash flow. So their numbers were very positive last time, and that's a clear uptrend. Fast markets.
We got also pets at home. I know Maple. Are you listening, Maple? Your lovely dog.
Not listening.
Pets at home shares up 4%, and this is after the market digested the Competition and Markets Authority vet sector proposals. Let's have a look here. There we have it, giving you a look at the 2-minute chart to show you the move there. Also, Entain is the other one that's moving very fast indeed. Let's get that up for you, down 2.6% there. Entain, I have to say, not one that I have taken a position in the past. We also have, and this is from Andrew McKilvey. This is after the third quarter report. Well spotted there, Andrew. Also, Airbus.
Just one thing on the Entain there. Look, it's trading fairly weak today off numbers. So don't forget, if you break into Entain, for those that don't know the stock, this is Ladbrokes, this is Coral, this is BetMGM, this is Eurobet. This is very much the betting industry. Don't forget that we've got the autumn budget around the corner.
Yep.
And betting levies are very much on the table from what I'm hearing.
Yeah.
So just be aware this may be capped with a risk event just around the corner.
I remember we were sat together on the trading floor last year, last budget, and there was already mood music surrounding that, but it didn't happen. Now we've seen a month and a half before the budget, we saw just even some talk of it, and we did see a reaction. Some of these stocks did fall.
Yeah, I mean, look, it's an interesting space because what I find as a market participant looking at companies like this, yes, you can play on the fact that there are big sporting events, and it's been a kind of a quieter autumn so far, with the kind of Premier League kicking up and all these kind of sporting events, stuff that typically drives volume here. But what I'm interested in is the poly markets and the Kalshis. You know, this kind of new wave. If these guys are going to try and pick up new business, where does it come from? And you already saw the nicely invested $2 billion into poly market yesterday. They're expanding into sports over in the US, and so if any of these companies have got US exposure, they're going to have to defend against a frighteningly quick growth beast in poly market and Kalshi. So it's interesting. The rise of these event contracts will continue to become more and more popular. And I wonder if you can just find a way to bet on anything. And you don't need to then go to a bookies, because this is going to be a wisdom of crowds. I'll tell you what is really interesting when I look at these poly markets is the kind of moving back into this crowd wisdom scenario. There was a story that was years and years ago about these experts. They all had to go in and kind of weigh on a farm. I don't know the name of the study or anything, but they had to go and weigh a cow, right? What is the weight of that cow? And they asked all these experts about the weight of the cow. And there were four experts, and then they asked everybody at the county show to guess the weight, and the crowd got closer than the proposed experts. And so what I have been doing, talking to clients about, is using a poly market to look at all the different market expectations, to use this as a crowd wisdom indicator. So you know, if there is a piece of economic data, there will be a poly market on it. There's lots of things going on there that are definitely worth looking at.
I believe that, because here's a handy factoid. When it's a real split, when you can see that the markets, like when we had Theresa May's gamble and we ended up with a hung parliament, a lot of people in the city often say if the markets can't call it close, then you go down and you look into one of these shops to see what the mood music is. Don't have to even go in, just stand outside or take a look at what people are saying coming out. Entain reporting a 6% rise in Q3 net gaming revenues. I like what Luke's saying about this growth, because I often watch the space when I go to the US. Have you ever used FanDuel?
Yeah, it was similar game.
Yeah.
I mean, like, this is just throw out poly market on here, and you can see the volumes, you can see all the prices. If you can chuck my chart up on the screen, guys. So here you go. So this is poly market giving you the New York electoral mayor outcome when it gets to, is there going to be a Fed decision in October? What is the tariff going to be in China? Is it going to be effective by November 1st? Nvidia up or down? So some of these things we may end up competing on to try and kind of get some of this action here in the UK. But the percentage of federal job cuts in 2025, the number of federal job cuts, political bets. People are using this as a yardstick to kind of use as an economic indicator these days. It's fascinating.
Yeah.
In the subject of fast markets, let's move on. I saw Arsax, you were asking us about Walmart. And if you want to fire up Walmart, I want to get your technical brain on this, because to me, I think this looks like it's potentially looking at a breakout. I would love to get your technical views on it. What do you think?
Let's have a look at the daily first, and always scroll to the right. And it does look on the daily that we have broken above that February 2025 level there. Also zooming out to the weekly as well, just to make sure we haven't missed anything there. And indeed we haven't. I'm going to take that line away and put a new line just to show you what I am looking at here. And there we are, the perforated line to show you that a bit clearer. And then further on to the monthly, that is a clear breakout there, very strong one as well. We like that green candle on the monthly chart. It is easing back a bit, but it does look That it's a very nice upward trend at the moment.
And actually, there is news on this. So it's up, and it looks like the breakout is due to this story. Walmart hits all-time high after announcing a partnership with OpenAI. This is something I hadn't seen. So Arsax, thank you for drawing my attention to this. I've got Yahoo Finance up on my screen. Chaps, if you want to throw this up on the screen. Clearly, I'm looking at buying some new shirts at the moment. so you're well done, Charles. Throw it there for some advertising.
Expensive taste there.
Not when you get like 3 for...
Yeah, that's the thing. They get you in because you need to buy 3 or 4, right?
Yeah, so Walmart said that customers will now be able to shop and purchase items directly on the ChatGPT platform using instant checkout. Additionally, on the flagship Walmart website, Sam's Club website, customers will be able to interact with ChatGPT conversationally in the search bar. Interesting. This is another thing that OpenAI has started to do to try and capture more of our attention, more of our time on that platform.
And well done, Arsax, for showing this to us, because it's a space that I'm very keen on, because this is the next step, the next in the evolution to when we have in our chat. So in China, it's WeChat. Here, we're more Teams, and we're more WhatsApp based, but we will very soon get to the space where if I'm sharing a picture of a recent holiday and you go, hey, whoa, nice shirt, it will immediately flag up and you'll get a prompt to say, we know exactly where the shirt can be bought at which price. Would you like 1 cent tomorrow to your house?
I like that. I also like the fact that you can
You write all the stuff arriving at your house.
Do you know what? I like it because it becomes your assistant. So I've started to use Perplexity to go and search for discount codes for me. So if I need to buy something, I'm like, I'm on website ABC, go and find me an active discount code. Comes back, and then it says, here's 3 that are working, and you go, and then you can go and get 20% off.
Yeah.
It's the best.
And yet again, this is the reason why I think we need good base load in terms of energy. I know Bill Blaine poo-pooed the whole theory of mine, saying that, you know, all these smarter chips and everything will mean that we don't need as much energy. Don't disagree, but I think he is maybe a bit like 5 years out. In the meantime, we are going to need a heck of a load of base load energy. Take a look at AI demand for data center capacity as Luke does his online shopping using ChatGPT.
I think what you're going to end up in a scenario is when we start to talk about AI is to talk about power as the input and tokens as the output. So, and power is the constrained resource. It is undoubtedly going to be part of this next wave. If you've got all of this OPEX, all of this CapEx, capital expenditure going into building out all these data warehouses and everything that comes in, I think it was Elon Musk that said each gigawatt of power is going to take $50 billion worth of investment. And so they're now looking at AMD kind of doing a deal for 10 gigawatts and Oracle, Broadcom getting 5 to 10 gigawatts. There is a significant amount of money going into these, and power is going to be the constrained resource. So we were asked to look at Constellation Energy Corp. So here we are now, and this is the daily candles, this is that trend just playing out, right? It's just absolutely taken off. Absolutely taken off. I mean,
I don't see a story behind Constellation, do you? Have you seen a line as to why?
A new story?
Yeah.
Well, exactly the one that I've just said. So this is just this power theme. So Constellation...
Also, it's just based on that.
They're an energy company, electricity power provider and gas supplier. That is their primary business, and that's just been an absolute beneficiary, as a lot of these stories have. Let's just take a quick look at the fundamentals in here now. Trading with a pretty boring dividend yield, which you normally expect these power companies. You normally expect these power companies to have a little bit more going on. Tip ranks is where we start to look into the nitty gritty. What do we think? What does the data tell us? So the data telling us it's a 7. Fairly interesting-ish. Crowd wisdom looking positive. Fundamentals looking positive. Technicals, of course, looking positives. But watch out. Hedge funds are selling. Hedge funds are selling positions. 870,000 shares that have been sold last quarter, which doesn't seem like a lot, but it's important enough to drag that down the scale. And we're just going to flick over there to compare what the street looks like on it. $381 as the average analyst price target. Things are still upside. Technically, I can buy the upside because you're in a significant uptrend. Let me just zoom out so we can see it.
Trend is your friend. Don't fight.
Trend is very much your friend.
Don't fight it.
Yeah.
Right, and very quickly, we've just got seconds to go, but whizzing you through and just market espresso. Just having a look at that for you. Stocks to watch: Papa, Hancock, Stellantis. Stellantis planning, of course, that 13 billion investment. Also,
Well, that's interesting. So is that Papa John's report that Apollo have bid for Papa John's?
Yeah.
$64 a share.
That's according to Reuters. Yeah. Are you a Papa John's fan?
No, I don't think so.
Yeah.
I don't think so.
Reporting today as well. Don't forget, we've got Bank of America, Morgan Stanley, United Airlines, and waiting on more news on Broadcom's new networking chips. Apparently, details might be coming forth today. You saw that humanoid robot I brought in, didn't you?
Right, yeah, I do.
It had an NVIDIA chip in.
Interesting.
Yeah.
Interesting. I think I found out who our 2000th subscriber was.
Oh, who?
Our good friend Sarah,
Hey,
who is due to come back from mat leave very, very soon. We can't wait to have you back. Sarah and
we are
little...
counting down. When is she coming back?
I think at the start of November.
Nice.
So Sarah and little Charlotte, they think, she's messaged me, they think they were our 2000th subscriber. So if you are, fantastic. Hey, you want a dinner with Ange?
Let's do it. Let's do it. And all of us, and the humanoid as well. Right, we got to go because we have Piers waiting in the wings. Tech Talk is coming up next with Piers and Rich.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome back to Tech Focus with myself and Piers. He's here, Mr. Apex Alpha. We've had a name change, haven't we?
We have a rebranding of sorts, and it's bloody stressful coming up with a name. I must admit, it's ridiculously.
Tell me about it. That was my whole Sunday.
I was
bugging me.
Your whole Sunday. I was consulting my brother on this subject because he was just talking me through how the stresses he went through when he was trying to name his art gallery in New York, but then ultimately came to the conclusion that it just doesn't mean anything. And the name is anyway. Yeah, we're
So right, for those of you that have not joined either Tech Focus before, and why do we have Piers on, or you don't know, I see the FTSE just sold off 40 points in a straight line. Interesting. Or you're joining on the YouTube channel for the first time as you're coming in from Piers' TikTok. So that's on YouTube. It is Trade Live with IG. We're going to do a little bit of background here on who's sitting next to me and how we know each other. So Piers started covering me back in 2015. So happy 10-year anniversary, bro.
yeah, man.
And yeah, a lot of fun we've had over the years, a lot of arguments we've had over the years. But at last, we're actually singing from the same hymn sheet. You've come round to the dark side of being somewhat bearish at the moment. But tell the people a little bit about yourself. When did you get involved in finance in the first place?
Well, I always wanted to do it. I studied banking and international finance at City University. I literally did my work, and then went home. So I didn't live the normal university experience. Just wanted to do the finance degree, and then got a job at an asset management firm as an assistant junior fund manager on the buy side. And then
assistant to the junior fund.
Yeah, there you go. I'll do the jokes. And then
let me know when you want to start.
And then I got an opportunity about 2 years into that to go and work at Bear Stearns, and it became very obvious very quickly to me that I enjoyed being on the sell side. And this was back when life was fun as an institutional corporate stockbroker.
So what year was
prior
that?
To 2008. I was doing Asia ex-Japan, so flying out to Hong Kong once a quarter. And then Bear Stearns collapsed. JP Morgan took over Bear Stearns. I had to go through the rehiring process and join JP Morgan.
Right.
And did Asia there, Hong Kong, India, Asia ex-Japan again. And then
you do have a bit of a funny accent. So were you born in the UK or?
I was born in Australia, in Adelaide, Australia, but I moved over to the UK when I was 11. And then moved back to Australia and lived in Hong Kong for 5.5 years and New York for one. Istanbul for another one. So then after JP Morgan, financial crisis, the fallout from that was a lot of layoffs. So they got rid of all the Bear Stearns people. Yeah. And then I went to a different model. I left investment banking and went into the agency broking model, which I went through 2 firms which shut down in Hong Kong. I almost gave up this business quite a long time ago because
quite a few times.
But I love it so much, so I've stuck with it, and I managed to get it for things, but it's tough. But I've been around many firms, and now I do a very boutique thing. Exactly what I did sitting on the desk at JP Morgan, however many years ago that was, 18 years ago, but just I'm completely under my own steam and my own. I can do whatever I want,
Yeah.
which I like.
At
I can
last.
sit here on TV and do this with you.
So if you're watching on TikTok and if there's any sound issues or anything like that, please come on to YouTube. We're live on Trade Live with IG. So if you just search Trade Live with IG on YouTube, then you'll pick us up in perfect HD quality in a beautiful studio. Because we've got a lot to get through, Piers.
There's a lot going on.
Do you want to start with
as usual?
ASML numbers this morning?
Yeah, well, listen, the numbers are kind of irrelevant, really, because we all know that these guys are the only people in the world that make EUV machines. We all know they're a first-class company. We all know that their customers are dealing with extraordinary levels of demand from AI. The only thing that we didn't know and that we're dealing with is that the lumpiness of the orders is a little bit of an issue for ASML, and of course their Dutch CEOs. Very conservative. He's not like these Americans who's pumping himself up all the time. He said for 2 quarters in a row, and I quote on the conference call, "I have no guidance for you for 2026. I don't know." And the market didn't like that very much. Plus the orders, plus there was some concerns over the US, Europe chip restrictions, so there's some overhangs that have been lifted. But the most powerful thing that's happened with ASML is everyone's rotated into some of the more unloved parts of the market. The high-quality names that were forgotten. 3 months ago, no one would touch this stock. Now it's the hottest thing since sliced bread. What's changed fundamentally? I'm going to go ahead and say zero.
Yeah.
So that's just the way this game works. So the numbers today just reaffirmed that the AI story is alive and well. And of course, the fact that the chip restrictions were lifted means, in theory, that their customers are probably going to start ordering again. Listen, ASML's not going anywhere. It's high quality. Everyone needs their machines. It's a bit lumpy. It's a bit cyclical. But now it's the hottest thing in the world, and it's probably a lot of people are probably still slightly underweight this stock, so it can probably go higher.
That's the thing. And just from the sheer fact that it's not a US name and that it's not as well known as all the others, then it obviously trades at a bit.
It's also one of the only tech stocks that the Europeans can put their hands up and say stands up on a global stage, right? What can you buy in Europe that's liquid and high quality in the tech space? ASML and SAP, not even Infineon and ST Micron. That's it. You've got 2 companies to choose from on a global stage in terms of liquidity.
Right. Another stock you can buy in Europe today is, of course, Louis Vuitton, right?
Yeah.
We're moving away from tech focus a little bit there.
Yeah, but luxury fits right into my wheelhouse as well, because I did Asia, so I'm very familiar with all the luxury stocks. Listen, again, this is another good example. I mean, what's going on with that chart? It's up 13% today.
Yeah, it's just because it's the daily chart. You can see the line is.
Oh, that's the daily chart. Sorry.
Yeah.
Okay, so again, LVMH and Kering. Let's just deal with it. LVMH fits into the same category as ASML in the fact that they are also on a global scale. They're one of the Europe's only very liquid, high-quality companies. Obviously, it was a market darling for many years, and then it's gone through a difficult time, as has the entire luxury space, due to China, due to inventory and company-specific stuff due to brands. But ultimately, it's a positioning story again. But they beat this morning. But let's look at the numbers, right? Plus 2% revenue growth, comps. Sorry. And that's not a particularly impressive number, but what does matter is that last quarter it was minus 9%, and this stock, and they're now returning to growth, and they beat the expectations, and everyone's pretty much underweight Louis Vuitton at the moment. So put those all together in a pie, and you go bang, up 13%, and it's taken the whole luxury space with it. I bought Kering, as I've mentioned a number of times on this show, about 3 months ago when it was in the doldrums. And typical me, got it right in terms of the sort of being there before everyone else, but then just jumped off too early, and everyone's piling into it, and now it's kind of almost a momentum trade, which is so ridiculous given where it was.
You've been more likely to buy a Gucci top or a Louis Vuitton bag?
I'm going to go with neither of those things.
Burberry?
Oof, no. You see you with a bit of that though.
What's your top of choice then?
I don't know. Top or handbag.
Right, let's move on then. We've already got a comment there. If you are watching live on the YouTube, you can also take part in this conversation because you can ask questions. What do you want peers to review? What do you want them to look at? come and join us on YouTube, Trade Live with IG, and you can ask us a question. The first one is from Caught Short. Thanks for the Soundhound call, Piers, moving up nicely. You know, you've had a great run at the moment, all right?
What, for the last 15 years?
About the last 15 years, you've come up with some all right stuff, but for some
At
reason,
the moment, unbelievable.
since we reconnected about 3 months ago, you've been on fire. I don't know if there's a correlation there, but if we can just go through some of the stuff you've produced, right? Marvell. Now, the market got Marvell wrong, but now it's getting it right.
Yeah, and now everyone's just can't get enough of it. Marvell's like up when the market's getting hammered now. It's absolutely hilarious. By the way, Caught Short, thank you. I hope you made some good money out of that. What are we talking about? Are we talking about Soundhound or
Well,
Marvell?
I just wonder.
Can we talk about AMD and Oracle, because that's important?
Yeah, so that's what I was thinking. Moving on, so we've got the not quite sure the circle of investment around OpenAI, but there are deals going on to the side as well, isn't there? So AMD and Oracle yesterday.
Yeah, well, I mean, listen, there's different things going on, right? So OpenAI and NVIDIA are trying to assert their power over the entire space and just grab as much land as possible. If you look at the ecosystem or the web for OpenAI, it's extraordinary. It involves like 40 companies or something, big companies.
Huge.
But there's other things going on, so, and AMD is a special situation. It's exactly what I've kind of hoped for this company, which is that we all know that they took market share from Intel for many years and chipped away and rebuilt themselves. But the big question mark is can they compete in the GPU accelerator? It's a very specific thing. Chip with NVIDIA, because no one else in the world does it. NVIDIA is NVIDIA because they have a complete and utter monopoly on this chip, which trains the large language models. It's expensive, it's got very big, wide margins, and it's driven NVIDIA's stock price for 2 years. And by the way, do you know that Jensen Huang and Lisa Xu, who are the two CEOs of these two companies, are like distant cousins?
Yes, incredible, isn't it?
Yeah, it's hilarious. But both of them are high quality, right?
Yeah.
And they both, Jensen gets more headlines because of the stock of NVIDIA, but Lisa is, in my view, right. She certainly speaks more eloquently than him, but they're both very good at what they do. And AMD's chip is now getting the endorsement of the market. Oracle just hired them yesterday for a whole bunch of GPU cluster, which normally that order would go to NVIDIA. And let's just be crystal clear about this. There's only two options when it comes to the GPU accelerator clusters, okay? And everything's been going to NVIDIA, and now bit by bit, it's people are doing deals. I mean, Jensen's response to the deal that AMD did with OpenAI the other day, I thought was fascinating.
Oh, go on, I haven't seen that.
Because he said on CNBC, and you could tell by the way he reacted to it, that his exact words were, "I am shocked and confused."
Wow.
But it's really interesting. Just think about those words, right?
Yeah.
So first of all, there's a little bit like, damn, we missed out on that. Second of all, it's just like, hang on a sec, wow, because he respects both of those people, Sam Altman and Lisa Xu. So he's thinking, and then you could tell he was thinking in real time. And by the end of the conversation, he basically said, yeah, this is actually probably quite clever, because he knows what they do and he knows what they were trying to achieve. And listen, I love being long AMD, and so long AMD, short NVIDIA, to me right now makes more sense than it ever has before. And I've tried to put that trade on many times. It's worked, it's not worked. Ultimately, it hasn't worked. Right now, it just makes so much sense to me.
Right, so long AMD, short NVIDIA.
Yeah, if it doesn't work, I just don't know why it won't work, because it just makes so much sense.
Yeah.
One of them is coming from a position of max saturation of market share, and one of them is coming from, it's 93 versus 7.
And also what's the market cap of AMD? So you've got a $4.5 trillion market cap in NVIDIA.
Yeah.
And then
AMD's ticking up. I mean, as of the close last night, you have to remind me. So.
350 billion.
Yeah, it's ridiculous.
Wow,
it's ridiculous.
It's not even.
And by the
10%.
way, NVIDIA don't even have any CPUs. You got to remember, right? In the world of PCs, right? There's two people, Intel and AMD.
Yeah.
NVIDIA don't make CPUs.
Right, Intel. You named it. First of all, if you're getting sound problems on the TikTok, come across to us on YouTube. You can find us on YouTube at Trade Live with IG. If you're visiting us for the first time, then hit the subscribe button, because Piers is on here every week. And we do also have some top other guests on that you won't find on TikTok. You will only find them on this show because they are professionals in the City of London and they're at all the big institutions. They come on here and we've had some cracking calls from them as well. This man gives you a good 100, 170% ideas, but we've actually had one of a 250% idea in the last few weeks. Piers, go on. In Intel.
Okay, well, I mean, the update on Intel is that I'm out of the position and I'm not touching it. 40 was the absolute max that I thought it can get to in the short term, based on everything every bit of available information we have, including all the positioning and the price action and blah, blah, blah. So it got to 39.6, and I think it's time to step back. I mean, listen,
Just about to see that on the chart as well.
They need to show us. They need to show us how this fits together now. The stock has had a big squeeze. Probably lots of shorts have had to get out of it. Some long onlys.
Chart up, guys.
Long onlys have probably had to get involved. Can we have the chart? Because I just would like to be able to talk about it whilst it's there. So it'd be great. It'd be great if we have a GPC chart with the 200-day. But anyway, do we have that? No.
I'll give you the 200-day if you want it.
Yeah. Anyway, so listen, there's a few people knocking about trying to sell it. I mean, Bank of America came out yesterday with a note downgrading it to sell.
Oof, really?
Yeah. Listen, Intel remains a battleground. Okay, there's lots of haters, and until such time that they prove to us that they're actually making that this deal they've done with Nvidia in the CPU, GPU, aka XPU business is going to make it's going to contribute significantly to the top and bottom line, and or they get stuck getting orders from Broadcom or Nvidia in the foundry business, and or their next generation AI chips start to get sold significantly. Long story short, revenue and earnings, they need to prove it, right?
Yeah.
At the moment, it's just it's a reversal of positioning, a reversal of sentiment, a lot of hope. But we've got that priced in now. We're 23 to 40. I mean, listen, I don't know what
the risk has gone, but the upside still. They need to follow through now with that.
I love the story though. I love the fact that this is a great positioning story. If they can deliver, and their earnings are going to be fascinating. It's probably going to be a little bit early, this earnings call, for them to show much to us, but the guidance will be very interesting. And I think that for those of you who like to just hold things and not trade them, I think, you know, any further weakness in Intel, I mean, listen, the market, fingers crossed, has another sell-off. But listen, if this stock comes back, I'd just buy some and just hold on to it.
What is coming back? Is that 32, 33?
Yeah, I don't know. It feels a bit overcooked to me. The thing is that Intel, if the market gets hammered, Intel will be down hard. It's just the way it is for Intel, unfortunately.
Yeah. Right. We've got a question here on your views on Broadcom.
Broadcom, yeah, okay. Well, I mean, listen,
Obviously,
Broadcom did yet another deal with OpenAI. Okay, what are my thoughts on Broadcom? A very, very, very smart hedge fund manager said to me in 2013, when this was very much not, it wasn't a very well-known stock back in 2013. I remember I was in Geneva in his office, and he said to me, and I was talking to him.
Bonjour, Piers.
Bonjour. And he said to me, he said, it was a particular moment in the stock, and I said, listen, what do you think about shorting some here as a trade? And he said to me, and I'll always remember him saying this to me. He said to me in his French accent, you don't short Broadcom. This is one of the highest quality companies in the world. And he knew that in 2013.
And it's still true today.
And look at it. It's high quality, and that is all you need to know about Broadcom. Broadcom and Google. Broadcom should be in Mag 7. I don't know why it's not in Mag 7. It should be Mag 10 at this stage anyway. Mag 7's an obsolete thing.
True, isn't it? Does Oracle get in there?
No, I don't think it doesn't deserve to be in there quite yet either. They need to sort their margins out.
Okay.
Broadcom is high quality. It's like Google, right? It's very, very, very. It's got loads of cash. It's got a very. I mean, on a growth-adjusted basis, the valuation's completely fine. They're a behemoth. They're diversified. They've got the whole thing. They've got the whole shebang. So, I mean, all I can say to you about Broadcom is it's just super high quality.
Blake 7 wondering about his pension. What are your top 3 for the long term?
Yeah, well,
Tricky, isn't it?
Well, well, there's one micro cap which I would recommend to anyone to have in there, which is ticker code ALMU, which is not even on your platform, by the way. I don't think.
Okay, right. Won't get up there.
They're adding it to loads of platforms, but anyway, they're involved in quantum, a whole bunch of other things. But
that's one.
So that's one. Then there is, in terms of entry right here, right now, I would put AMD in there.
Right.
And I've said that that was my answer to the person who asked me this exact same question 4 months ago.
When it was about 40% lower?
Yeah, well, and the rest, yeah.
Start off, guys.
Listen, I'm gonna say Oracle, AMD, and Illuma. I'm gonna take 1 small cap and 2 large caps.
Oracle.
This is a pension, right?
Yeah. Nice.
I think
right.
in the short term, I think Oracle's going to have problems, but in the long term, I think they're going to win.
Okay, fantastic. We got a new one that you want to look at today. Do you want to go there first? Do you want to go Pfizer, or do you want to go quantum?
I wouldn't mind talking. Well, let's just quickly touch on quantum. I've spoken a lot about this in the last week or so. Listen,
I'm getting killed in this thing.
Yeah, I know. Listen, anyone who's trying to sell quantum, and can we get a pre-market in IO? What time is it? In IO, what time is it?
So
we don't have a pre-market.
You can see my 3 attempts at shorting this, right? So that's 100 shares.
This would be funny for all the guys following me on this. We've been talking about this stock. Listen, Rigetti, IONQ, D-Wave, quantum computing, and QuantumScape, even though QuantumScape has nothing to do with quantum, I might add. So those are the 6 quantum names, which the retail crew are buying and buying and buying. And by the way, I've spoken to a lot of these people and respect. They don't care about what it is they're buying or what the fundamentals are. They just don't care. They're trading a chart and that's it, with a stop.
Yeah,
that's
just
it.
the chart.
But let's be clear about that.
Yep.
They don't care what the company does. They don't care how expensive it is. They trade a chart with a stop.
And momentum.
They could be selling potatoes for all they care.
Yeah.
Right, so
they probably have higher sales.
Fascinating mentality. So it's up to the professionals to step in and go, hang on a sec, this company has negative earnings growth of 400%, negative revenue growth of 400%, $3 million worth of margin, and a $15 billion market cap. What the hell is going on? But we're in the middle of a frenzy. And by the way, and it keeps getting fed by some decent fundamental stuff, by the way. Yeah. IONQ, who are the one that I mentioned a couple of weeks ago, if you're going to hold one for the long term, for me it would be IONQ. But even that is trading on it. It's valuation doesn't even come into the conversation. They have but that it doesn't matter. Valuations mean zero right now. We're in the middle of a frenzy in robotics and AI and nuclear. I mean, OKLO is. I love that thing, but come on, it's trading on 180. What's it now? 175, $180 a share.
Yeah, 178.
There we go. And this is, let's put this in perspective. When it got to 140, that was crazily overcooked. Bank of America came out, a couple of other people came out, downgrading it. It's like, let's calm down a bit.
Oh, really?
And then just bang, take that. Another 50%.
And party.
Yeah, just take that. And there's nothing going on. Like, this is just a grab. So what does that tell me? First of all, I'm not trading these things because no thank you at the moment. I do like OKLO, by the way. I've done a lot of work on this one. I think it's going to be I think it's going to be a winner. But I can't, with a straight face, buy the stock here.
No.
And listen, also, what's this telling us about the market? Especially when stocks are going up for the wrong reason, when people are just literally pressing buttons on a screen because everyone else is, and like it's all a little bit frantic. Never a very comfortable moment. Retail people will laugh at me and go, "We've out-traded you this year," and well done, that's true. You guys
are not finished yet.
You guys are killing. Yeah, the year's not. Yeah, no, careful, mate. I mean, this year could end. But yeah, and listen,
There's Ali Paul is saying he's up 300% on Octo. First of all.
Yeah, well done, mate. Trading. Well done. And there's a lot of this, right? Because I'm very envious, jealous of the mentality because they just don't care.
It's brilliant.
They just hold it and keep holding it, and everyone else is buying it, and they don't even think about the valuation. And that actually, that's a strategy.
Is a lot of crypto people have been in that situation, and on Friday you end up dead in a Lamborghini. So you've got to take your money.
Listen, what's so funny and so ridiculous is I speak to retail and I speak to hedge funds. I had a conversation with a hedge fund last. What day is it? On Friday, I think it was Friday, and the conversation started with IONQ thoughts. He said zero, going to zero. They're all going to zero.
All right,
absolute zero. Meanwhile, I mean that's a conversation, right? That's a real conversation with a highly intelligent 30-year hedge fund veteran. Yeah. Who's it's a zero, and they're all trying to do. They all think the same thing, right? And because they are professionals and they know what happens.
And because they've seen.
We've seen it. Okay, exactly right. And do you know what? I'm sorry to everyone, but I really hope it happens because they need to learn about what happens when a market goes badly.
But the thing is, people should have learned in 2021, right?
They should have learned just the other day in April.
Yeah.
There's people that say the market can never go down.
Yeah.
Look what happened on Friday. It went down. The Nasdaq by the time the futures closed was down almost 7%. right? That's circuit breaker. That's no bid. And then got rescued.
No bid.
There's no bid.
And that's an index. So when we talk
Exactly.
about some of these stocks,
these could be, on a bad day, if things go badly, this could be down 50, 60% in one day.
I was going to say 40.
Yeah, okay, fine. Let's call it 40.
You'd buy them at 60.
Fun, wouldn't it? I'd be glad. But that's the problem.
Right.
You pile into them.
We're going to take a very quick 1 minute break. Then we'll be back to talk about Pfizer, Novus, Novo Nordisk. We got a new name that we're going to talk about, which I'd almost... But I am going to keep that under wraps until we're back. We're going to talk about PayPal and then any other questions that you... Friar Tuck saying sell half and run with half.
We are going to talk...
Sell half and run.
By the way, we are going to... Sorry, I'm laughing at the name Friar Tuck. I'm assuming that's not actually his name. We need to talk... You reminded me. PayPal, Pfizer...
Yeah. Don't say the secret one. We'll be back in 1 minute. If you're on TikTok, come and join us. YouTube, Trade Live with IG, Trade Live with IG. If you're here for the first time, give us a like and subscribe. We'll be here every week, but we'll see you in 1 minute. Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Welcome back to Trade Live with IG, everybody. We're going to go straight to look at the futures, what is happening in US futures and the European indices as we are. We got 0.5% rally in the S&P 500, 65 basis points in the US tech. FTSE's down on the day. They're selling the FTSE. Get out of the low beta defensive names there. Volatility is getting crushed by 2.5%, trading at 20 on the VIX. And gold, a position that Piersey here has on spot gold.
Where is it?
4,208.
Ugh.
Yeah. You see it yesterday, it was at 4,175 at like 6 a.m. and it got slammed 2%, well, 1.7% in a straight line.
That's happened 3 or 4 times though. It's just because it gets overbought. And
it's a risk asset now, isn't it?
Yeah, but I hope so. I mean, what do you mean? That's not even that's a. Of course it is, like everything else.
Yeah.
Right? But this is the thing. It's acting like it's not. Like at the moment, okay, it doesn't matter. Okay, let's take it. Whether it's a stock, whether it's gold, whatever it may be, right? It's a thing. There's a market, buyers and sellers. At the end of the day, it's just a market. But what I find amazing about this is that I can't remember the last time that I've looked at something, whatever it may be, and the argument for it. Because listen, the argument just I get it, right? It makes sense. Piling into gold with a lack of confidence in the US balance sheet and fiat currency makes a hell of a lot of sense to me, right?
And a shutdown.
shut down, just everything. Like, but when we've got that going on whilst the market's making all-time highs, which is obviously due to the AI scenario. But the point is that the gold just to me is just like, and now it's become a new thing, because now it's a positioning story. And again, retail now are using this as their latest plaything. They don't care whether it's gold, silver, or potatoes. It's just a chart to buy that's going up.
And you need one central bank to say, yeah, that's enough. Boom. There's $1 billion worth.
We're such painful bears. That's awful.
Right, we got the Times today saying they have coined this rally, everything, everywhere, all at once. Pretty much sums it up, doesn't it? Everything, everywhere, all at once.
Well, it's not everything, but okay, yeah.
Well, what's left still to go?
Things, yeah.
Right, chart off, guys. So we're going to come back and we're going to look at Pfizer.
Yeah, let's talk about Pfizer. I just feel a bit sorry for the people who are on my TikTok because they're having to deal with me at the most extraordinary angle.
Well, they can just look at my side of the screen. That's fine.
Yeah,
They all see the same.
Anyway, Pfizer. Let's talk about Pfizer, guys. Listen. This is an off-piste idea, I guess. If you look at the chart, can we get a chart of Pfizer? There we go. That's the one I want. That's the one. Okay, a little bit out. Can you zoom out? Okay, whatever. Okay, so, I mean, listen, Pfizer has been in trouble for a long time. They have regulatory concerns. They came off the sugar rush of COVID, which obviously had a huge amount of sales for them in the vaccine stuff, and their pipeline hasn't really delivered. So, but you could be forgiven for thinking, based on the price action in the chart, that they also were struggling in the earnings department. They're not. They're on 8.5 times forward, which is super cheap.
Really?
Yeah, they're very, very cheap. They're these guys. Like, sometimes when you look at a chart like that of a legacy company, you think, oh, hang on a sec, let's check out their earnings. Maybe their earnings have taken a hit. No. So the only problem they don't have is they don't have any growth, and they're just not in a sexy part of the market. It's emotional. It's psychological. And the other day for 24 or 48 hours, when Trump did the deal with Pfizer and everyone else, and Trump put together the online drugstore. Every one of these pharma companies in the world had a massive rally. It was like, well, we're rotating into pharma.
10% up.
Straight back down to where we are. I love this stock here.
Okay.
I love it. My conviction levels are high as they can be. And
I'll back you in that.
Multiple reasons for that. The technicals are beautiful. It's defensive in a market which, in my view, is going to become more defensive. They've done the deal with Trump. They have bought their GLP-1 pipeline company. We know what they've done that now, which means they've they've now got their inorganic GLP-1 pipeline. And they've got a crazily good balance sheet and earnings, and the world hates them.
Right, I am buying 1,000 Pfizer then at 24.69.
There we go. Look at this. This is stockbroking in real time.
This is what we've been doing for 10 years.
This is what we do. But there it is. I mean, listen. Sometimes when the technicals and the fundamentals line up, and everything lines up to me in my head, just go bang. That just makes a lot of sense to me, and that's that right now.
Getting your ducks in a row. I
think I sold it to myself just there.
I saw a very funny TikTok the other day. They're saying, I may not have my ducks in a row, but at least my ducks are having fun. Your ducks, imagine what they feel about you all standing in a line there, bored.
I told you I'd do the jokes, mate. Come on. Right, okay.
PayPal.
PayPal. Right, again, PayPal's in a very similar, albeit very different business. Similar situation, different business. I'm not going to say similar chart, but can we see the chart? The chart's as critical. Right, it's almost a similar chart.
Yeah, it is.
Another behemoth, another household name, another high-quality, cheap company that, again, similar to Pfizer. Everyone knows who PayPal is, right? They've got 490 monthly active users, 290 million.
Are you one of them?
Yes, I am.
You do?
I use, actually...
I'm a Revolut man.
Actually, I don't use them very often, but I have PayPal.
Right.
They have struggling in the growth department. They've come out with multiple initiatives, whether it be pay with crypto, buy now, pay later, join the small business marketing programs. And they, of course, are involved in agentic AI, which I think is the most interesting thing that a lot of people are not thinking about. Who thinks of PayPal as an AI company? Well, it's certainly not the market. But that can change in a heartbeat. And it's beaten up. Okay, listen, Goldman came out with a note 2 days ago when it was trading at $71 a share, saying sell. Guess what their price target was? 70. Thank you very much, guys. That is a belting call. It opened at 68. I honestly, if I had the time of my day, I'd call that guy up and just say, what exactly was the point of that?
Well done.
What was the point of that? Full stop. Anyway, that kind of shows you where we're at, in my view. The bears can't come up with a better price target than 70. Goldman Sachs, which is arguably the most famous and high-quality investment bank in the world, their analyst on PayPal reckons that it's there. It's there now.
It's got 50% upside.
Right? So
50 cents upside.
I might hold a bit of it into earnings because I think it doesn't really matter what the numbers are so much. I think it matters what they say about these new initiatives.
Okay.
Don't often hold things into earnings, but if I'm going to, they need to have a lot of bad sentiment built in.
Are you much of a sports watcher, Piers Buckworth?
Big time, of course, you know that.
Big time. What do you do? Football? Rugby?
No. Well, golf.
Of course, the proper sports.
Golf, tennis, the real sports.
Yeah.
I don't watch much football, no.
What channel
golf and
do you-
tennis, I watch a lot of.
What channel do
Cricket.
you watch your sport on?
Cricket. Where are we going with it?
Starts with an F.
Yeah. Oh, I see what you mean. Sorry. Yeah.
Come on, son. Keep up.
So Fubo, yeah. Okay, let's talk about Fubo. I have never mentioned that stock on the program before.
New one, ladies and
These are a pure sports streaming company in the United States. They they used to be a meme stock. I'm sure the retail universe know exactly which stock what stock this is. It's had some extraordinary ups and downs in 2021 when everyone was buying the meme stocks. So what did this get to in 2021?
2021. Let's go back to the weekly. Wow.
See? Look at it. Now, you could be forgiven for thinking that they were going out of business. They are not going out of business. Disney have done a deal with them. They've given them a whole bunch of money, and they're essentially joining their two businesses.
This recently?
ESPN. Yeah, it happened the other day. Look at that 300% gap up in October.
Wow.
Yeah. Oh, where are you? Yeah. Anyway,
because it hasn't opened yet. Right. Okay.
No. Go to October. The stock was trading at $1. There you go. There. That's the Disney news.
No, that's okay. But why have we got that's the start of January there?
Whenever.
Okay. Well, I'll check.
I'm looking at
this.
Anyway, that move was 360% in one day, and that was the Disney news.
Wow.
Now, this is a, and then of course since then, look at the chart. I love the chart. It's really tight, it's no one's talking about it. Everyone's forgotten about it, but I have not forgotten about it because I follow it very closely. They've got this deal with Disney's great, right? They're putting ESPN and Fubo together.
Right.
So they're using they're combining their strengths. The balance sheet problems are gone.
Yeah.
Disney's given them cash. They've also got access to the entire Hulu Disney ecosystem. I think they can go to $6 a share.
All right, let's see what the analyst. There you go. Analyst target $5.13. Wedbush are there with $6. Not Dan Ives. It is Alicia Reese.
I think Alicia works for Dan because Dan was on tape talking about this the other day.
Right. And then the Bears, where are the Bears? The Bears are $2.60. So it's interesting. We've only got 4 sets of coverage there. 2 Bulls, 2 Bears. The stock currently $3.86. On the risk side, what are the risks there for Fubo? Because I guess
very
Disney
good question, mate. Because like usually I would give you the risks, but it's hard to answer that question because Disney have essentially got
underwritten.
This is nothing. This is like a bloody snack for lunch. Disney have just put them under their wing and gone, "You come with us."
Yeah.
And so I don't know what the risks are that Disney goes under. Disney has basically folded them into their business and cozied up with them. They're best mates now, after having been rivals, by the way.
Yeah, but I guess it's not really. It's not necessarily. It's not a short-term call, is it?
It's not really. This is going to take some time.
Yeah.
Right. If you and it'd be interesting to see what happens on the earnings call because they've still got no growth. This is going to kick in later. This is one of these things. This is one of these stories that everyone, I'll forget about it, and then someone else will buy it, and then it'll be up in a year's time. It'll be up 100%, and I won't be long. That'll be a classic one of those.
Yeah, probably.
But this is one for me. You've just got to be. You got to stay small as well. If the market gets hammered, this is a very volatile, emotional stock, right?
Okay.
Yeah.
Now, so 3 months ago, Piers opened his TikTok. He had 1 follower. That was me. We sat outside the coffee shop and built it all. And now you have been increasing almost daily now. You look like one of those charts of an AI stock. So about 9,000 followers. You update people 4 times a day. And now you've opened your own Substack, haven't you?
Yeah. And at 11 o'clock this morning, I'm closing it for those who haven't subscribed. So
What? I haven't subscribed yet.
Well, you better subscribe, mate. Otherwise you're going to be kicked out. No, it's the Substack is great. Listen, it's a community of people. You go from the big pond to the small pond, and you take the people who are serious about engaging and learning. And there's a whole diverse group of people, ranging from 40 and 50-year-old professionals who love markets but don't really know how to trade them so much, or some of them do, to 18, 19, 20-year-old kids who are very eager to learn. But the one common thing they have in common, all the people that come over to Substack and subscribe to my channel, is they're all just very, very nice people and very keen to learn. There's no nonsense. And we get away from all these fraud accounts behind the paywall. It's beautiful because they just go, it's ridiculous. My subscribers get 5 or 6 every single day.
Yeah.
People trying to...
I was laughing yesterday. We had Scotty Byrne of Credit Suisse fame, 30 years at Credit Suisse, is on it, and he goes, wow, this guy's actually talking sense here. He knows what he's talking about. And then he sent me a link to another one, and the other one was £500 a month, and yours is obviously 15.
Yeah, mine's 15.
And he goes, I wonder which one's better value. Yeah.
Well, listen, I'm very confident in saying to you that it is ridiculously good value because I'm charging almost nothing.
Yeah.
The idea is that the people who come, I will actually raise the subscription fees later. The first 500 people get it for 15 quid a month. So, and you've got 3 hours to get in there. 2 hours.
Yeah, an hour and 45.
Not even that long.
Right, that was a very fun interview. As always, should Piers get his hair cut is the next poll of the day. Was
that a question?
No, it's a question I'm asking.
Oh, yes, you're asking.
We're going to run a poll in it.
Do I need it? No, my hair's looking good, man. What are you on about? At least I've got some. Yours is a toupee, isn't it?
I wouldn't have the bald spot on the top if it was a toupee, mate. Right, that is the Tech Focus for today. Again, if you're joining us for the first time, please subscribe. We got some great guests that come on, and they've got more charisma than this man as well. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience.
Hello and welcome to Charts in Crypto on Wednesday, the 15th of October 2025. And What a week it's been since last Friday when we saw this very sharp sell-off on US-China trade tensions. And if we look at Bitcoin, for example, Bitcoin dropped by about 16%, I think, intraday. You can see this here on this big red candle. And since then, we've managed to bounce back a bit. But then yesterday, there were port shipment fees levied by both the US and China on their imports from each other. And that led to another spike down. But the interesting thing is, if you look at the chart of Bitcoin, we did manage to hold just above the lows seen on Saturday and Sunday. So that support area here, just below $110,000, seems to have held. Now, the question is what's going to happen next. And what is likely to happen next is that we basically have a sort of loss of volatility as investors try to figure out what is likely to happen next. And then what we need to look out for is the break out of that range, basically, that we've been in for the last few days. So what I'm saying is, as you can see here, we've got an accelerated resistance line currently capping us on the upside. And we would have to rise above the last reaction high. And that high was made on a Monday. And you can see Monday was a very low volatility day on Bitcoin. We hardly moved at all. And basically, we would have to rise above this high at $116,055 on a daily chart closing basis for us to break through this accelerated downtrend line and the last reaction high. You know that I always like to look at both. So basically, if we were to rise above that high, then we could head back up towards the high seen in mid-September. That was made around just below $118,000. So that would be our next upside target. And then we also, if we manage to break through these highs here, basically, we could then head back up towards 120,000 and so forth. But the damage that has been done by Friday's sell-off here is only negated if we were to rise above that high from Friday, so above the high of that big candle to the downside, and that high was made at $122,587. So a long way away from where we are at the moment. So I wouldn't be surprised if over the next few days, as I say, volatility remains relatively low. And on the flip side, if we were to fall again, so far we've held at the support area here, which was quite positive in the short term. But basically, if you look at these lows, they're around $109,000, 750, 746. So that is our line in the sand on the downside, because a fall through here and a daily chart close below there would most likely also take us through the late September low, back down towards the 200-day simple moving average, and probably also towards the low we saw on Friday, and that was made around $105,000. So that is possible. So basically what I'm saying is look at the range that we've been in over the last few days. A break out of it is likely to determine at least the short-term trend with regards to Bitcoin. But volatility in the short term is likely to remain constrained after this high volatile movement we saw last week. Now, if you look at Ether, the story is quite similar. Now, it doesn't look as dramatic here as on the Bitcoin chart, but that's just a scaling issue because we did drop by up to 20% on Ether, whereas Bitcoin dropped less than that before we recovered again. But the stories are similar to that of Bitcoin in that we've got this accelerated downtrend line, we've got Monday's high as our reference points on the upside, and we've got us actually holding yesterday way above the Saturday and Sunday lows we saw here. So from a relative perspective, we've held up better now that we've bounced back on Ether compared to Bitcoin. And if you want to analyze that, what you can also do is look at the spread between Ether and Bitcoin, and you can see that here. So this is Ethereum divided by Bitcoin, and you can see that we actually, over the course of this year, had a very, very strong upward move with Bitcoin outperforming Ether up until the highs in August. But since then, we've been trading in this downward trending channel, and basically we are still in this downward trending channel. So basically, Ether Ether was outperforming Bitcoin. I was just saying the opposite until the high in August. But since then, Ether is underperforming Bitcoin, except for the last few days. As you can see here, we're bouncing back towards the upper downtrend channel line here, that resistance area. So for this outperforming Ether to continue, we need to not only rise above this accelerated downtrend line here, or the downtrend channel upper line, but also above the 7th of October high, in which case we could see further outperformance as we did see for much of the year. Now, send your questions in and I can answer those. I've got one on Atom. I'll look at this as well. Let's just look at it now. But yes, coming very quickly back to Ether, same story as with Bitcoin. So for me, the line on the sand is Monday's high here. That was made at $4,924. And on the flip side, though, it is not these lows here, because probably if we fall through the late September low at 3,827, then it's very likely going to continue to head lower again, and we could then retest the lows we saw on Friday around $3,447. So that's the story for Ether. If we look at Atom, let's have a look at this. Here we go. It is not looking healthy either. As you can see here, if we go back to a longer term chart, we've been falling quite steadily for a while now. But what is important is that we have fallen. Can you see all these lows going back to 2024 and also March of this year? And that is not positive. So this whole support area here, let me just make it clearer, because as I say, quite often support is not just a level, it's an area. So let me just actually make it this area here, all of these lows. So basically, all the lows going back to September of 2024 act as a support area. We fell right through there. We closed below there in early October, actually on Friday and Saturday. So that's negative. And now we're trying to bounce back. But you can see here the upper area of that support zone. So the November 2024 low around 370, 324 also needs to be taken out for us to get back above that resistance area, because of inverse polarity, that support has now become resistance. And if you look at the trend itself, ignoring the support and resistance, what we can see is we saw a sideways trending range here between August and September, and now we are seeing a decline and an acceleration to the downside. So even though other cryptocurrencies also fell, Atom is actually not looking healthy, because it not only fell further and stronger, but also it was already negative when others were making a new all-time record highs. It didn't follow suit and didn't recover. So Atom is not looking bullish. Here again, as I said, I want to see if you are bullish still, and if the bulls were to be back in control, a rise above Friday's high, which is this one here, not just Saturday's, but Friday's high. And that's basically, that would take us back above this resistance line here and this high here on the 10th of October. So that we would have to rise basically to 417 or something like that dollars for us to reverse this momentum to the downside. Now, if we don't manage to do that, the trend is your friend, and that's still bearish. And as you can see here on the weekly chart, we're trading in record lows. And well, that's never a good sign, because we may well slip further. So if we were to fall through the low we saw on Friday at 285.80, I wouldn't be surprised if we went down towards 250 or perhaps even $2 here. So for me, the trend is my friend, and it's not looking good, because you can see this sharp acceleration into the December 24 high, then a sharp down move, then sideways range trading. And right now we're at the very bottom of that range, having fallen through it last week on the weekly intra-week basis, basically. So that's not looking good. Right. Now I've got another question here for future chart analysis. Would you consider the long wick formed on Friday or just the body instead? So the wick is the candle, basically shadow. What a wick is, if you look at the candles here, this up here is the shadow on this the lower shadow, and this is the upper shadow. Some people call these wicks because we talk about candlestick charts, but that's a Western way of saying it. Back in Japan, where candlesticks come from, we talk about shadows, so the correct terminology is shadows. And the body, as we know, is simply the difference between the open and the close. So here we had a close down here below the open, which is why this body here is, this candle is red. Now in Japan, red is actually the bullish one, and black is the bearish one. But anyway, here in the Western world, green or blue is bullish and red is bearish. But as you can see here, basically, I would consider the whole candle, so including the shadow of the wick, for my analysis, because these are the price extremes, not just the body where the market closed. So for charts, if you draw trend lines or resistance lines or anything like that, you can see I connect the top of the candle with, if I just don't have one, the top of the body here. But I don't just connect the bodies, I connect the candles. That's the correct way to do it. Now I've got a question about XRP. I've just written a piece on it. You will probably see it on the IG website in an hour or two. XRP suffered quite a lot on Friday, as you can see here, huge down move intraday, taking us to very low levels here. Indeed, I don't even know whether that's a real reflection of how low the market went, but yeah, not looking good. Just like Atom, as you can see here, we fell through key support on XRP. Basically also to do with huge whale selling. We saw billions of dollars being sold in XRP, and basically XRP also is still waiting for ETF approval. And obviously with the US government shutdown, that's not going to happen anytime soon. So all of that put pressure on XRP, and we can see here on Friday we fell through this key support area, which held since August of this year. That in itself is not bullish. And basically the same story holds with regards to a potential bounce back or not that we saw on Ether and Bitcoin. So we would have to rise above not just Monday's high in this case for XRP, but also above this resistance area here, which was the previous support area. And that goes all the way up to around $2.74. So I would like to see a rise above there. And ideally, as I said before, a rise above Friday's high, which was made at 283.85, for the bulls to be back in control. As long as that doesn't happen, the odds are still to the downside. This sideways trading range we're in at the moment may continue with low volatility over the next few days, but as long as we stay below that resistance area, the pressure is still to the downside. As you can see here, we have a series of lower highs and lower lows. Now, the question is, what happens if we fall through not just yesterday's low, but these lows here from Saturday and Sunday, as we looked at on Bitcoin and Ether? So these are key, and these come in around $2.32. A fall through there could very quickly take us back down towards these lows here, going back to May and June of this year, and they were around $2.07.50 or so. So that is a distinct possibility with regards to XRP. Yes, cryptocurrencies in general do not look as healthy as they did just a week ago. Friday's US-China trade tension, sharp sell-off, not just in cryptocurrencies, but basically a risk-off mood everywhere, impacting also equities. That has led a bitter taste and has left a bitter taste in the mouth of a lot of investors. So it will take a while probably to absorb that and for us to head back up again. So look at these key resistance areas. Look in the short term, at least, at Monday's high and Saturday or Sunday's lows, because those probably will determine what the range is at the moment, and the breakout of that range could then take us either higher or lower again in the days ahead. But right now, Friday's sharp sell-off hasn't been dispelled yet. Thank you very much for watching Charting Crypto. I'll be off for the next 2 weeks, but I'm back at the beginning of November. Thanks, goodbye.